Alright, Forex traders. So, welcome to Millionaire Sunday. And believe me, that name I just came up with, it's Millionaire Sunday. I literally came up with it about 1 minute ago. So, first things first, yesterday I uploaded this video and I just checked this morning and it's actually going viral. So, I want to thank each and every one of you that decided to click on the video and decided to stick around with me. I am grateful to each and every one of you. Now, let's jump into the game. Alright, so first things first, this is a story of how I caught a trade on gold. And I made approximately 1,000 pips, in which we're going to look at first things first. Now, about a month ago, I made this video. I already entered the position on gold. I think it was about this time yesterday. I'm already in $4,000 worth of profit. Yep, you can see I'm already in $4,000. I don't know if you can see that. All right, ladies and gentlemen. So I know I have not really done so much intro, but at the end of the day, I'll just be very, very straightforward to you. Gold is skyrocketing. Now, as you can see in the video, I was talking about how gold has really wonderful potentials on skyrocketing, and a month later I decided to do an upload. Although I uploaded the video on my separate channel, a month later I decided to do an upload telling you, hey guys, gold is actually respecting my prediction about a month ago. It is early hours of Monday, Sunday getting into Monday. As you can see, 3:03 a.m. October 7th. I hope you saw that. And the markets just opened. So if we come to our screen here, so this is gold. Now, a whole lot of times, for those of you who know how I trade, I always do a top-down analysis going onto a higher time frame. So we are on a monthly time frame here. So this is gold on a monthly time frame. And now, if I zoom out a little bit, one thing you should know about the Forex market is if you want to see the direction of the market, you have to look at the overall map. If you want to know where the map is headed, you just don't look at 3 steps in the mapping line. No, you have to look at the whole map. So the wider you can look at the market, I'll be honest, the better for you. So stepping out into a monthly time frame, we can zoom out. Now, I want you to look at this market carefully. Look at this market carefully. I don't know, does it look familiar to you? Look at this market carefully. Now, for those of you who have not seen it, this looks like Bitcoin in 2016, 2017, because let me show you what I mean. If we go down and if we get to Bitcoin is currently at $63,000 as we are seeing it here. This is how Bitcoin is looking currently. But if you look at this, let's say cross out this part, cross out this part here. So do they look familiar? Just look at it carefully. The exact same way Bitcoin literally had no value, and all of a sudden on the month of January, as we can see here, 2021, it just started shooting up. So literally before that, it didn't have so much value. And now let us now look at gold and let's see the similarities. And now look at gold. It looks exactly the same. Like, it looks similar. Let me not say exactly the same, but it looks very, very similar. So you can say that gold is going the exact same direction in which Bitcoin went in 2021. So I believe we have another opportunity for Bitcoin again. So it seems like we've gone back in time in 2021 when Bitcoin had not really so much value. And my friends, as you can see, gold is skyrocketing. So let us do our analysis on gold and let's see how it is going. So first things first, you know what? You don't need any spiritual guru to tell you. First things first, gold is on an uptrend. That's the first thing we've seen here. We don't need anybody to tell us that gold is on an uptrend. Now, the next thing we're going to do is we're going to mark out the key levels. And if you're like me, you've seen about 1 to 2 to 3 key levels. And let's quickly mark them out. So this is one of them. So this is one of the key levels. Now, another one, although it's not really that clear, is somewhere such as here, is another key level. Now, also look at this. On my last video I made about gold, I was on a trade on gold and I made about $4,000 demo, not a real account. I'm a brokey, believe me, it's not a real account. So so I made about $4,000 because I think I got into the trade somewhere here. So let me signify this. I got into the trade somewhere here and I exited the trade somewhere here. Now remember, this is a monthly time frame, so this movement from here to here, it made me a whole lot of money. I mean, this is a monthly time frame, so I held the trade for about 4 days or so. Now maybe if I was still on that trade, maybe who knows, I would have been up about $50,000. I don't know, but I mean, yes, it's true. All right, you know what? Let's forget about what I said in the past and let's act like it never existed. Let us do a new analysis. So we can see the market doing some higher highs and higher lows. From the bottom right here, it made a high, came back a little bit. Now it made a very huge high. Now, first things first, one thing you should know is that, look, let me tell you something about the Forex market. You see this thing you're seeing right here, is the replica, although in a smaller version of what you're seeing right here. It is the exact same thing. And have you ever heard the term history repeats itself? It happens in the Forex market. I don't know. I just wanted to do that. Have you ever heard the term history repeats itself? It always happens in the Forex market. And you see, it's the exact same way the market moved this area sometime in 1971 and 1980. I mean, it went up, came down, and went up so high. It's the exact same thing it did here. It went up, came down, and it went up, and it's still going up so high. So, I mean, it is earlier you jump on the trend, but hold on, I will give my final verdict. So, don't do anything yet. So the earlier you jump on the trend, the better for you. Let me quickly delete this. And now, like I was saying, we can see the way the market was making some higher highs and higher lows. It came here, it made a high, it came down a little bit, it came up here, and then it came down a little bit again, and it was consolidating around here. Then at some point, okay, let's say at some point it got to this level, it came down a little bit, then it went up again, came down, it came here, came down, and it's going up. So most likely, if this thing will retrace, maybe it could come down again to this level and go to the upside. You understand what I mean? So that is one. And now we can now go ahead to start marking out all key levels. So we can see this is another key level. I didn't see it earlier to mark it out. I'm trying to mark these things so little. So you can see how the market came here, respected this area, came back down, and came here again. So at this point in time here, you see, one thing about a key level most times is that whenever the price gets to a key level, most times it does like a little consolidation. It's more like, is it confused? Does it have momentum to break above the key level, or will it not break? So as you saw, the market was moving straight up, and as it got to this point, it moved back down a little bit, just to tell you that that is a key level it is respecting. So when it broke above, if you enter this trade here, it's going to be a bad trade. I don't know how you do your, I don't know the kind of trading strategies you have, but me, I'm not going to enter a trade like this. I would most likely wait for it to retest, as it did here. It came a little bit down, it broke above, then I'm going to wait for it to retest. And now if you had retested, and then I entered this trade around here, because it has retested, and I had my stop loss just a little bit underneath, this is like a cool 1:4 risk to reward. I mean, this is actually 1:5, not 1:4. 1:4.9, approximately 1:5. So this is a cool 1:5. Why? Because you waited for the market to retest to the downside, and then it goes to the upside. So it is just basically how the market moves in the Forex industry. So it came back here, it came up rather, and it came back down, and is now going up again to the upside. Now, I don't know, is there any other key level you can see? Now, this area is not really much of a key level, but I mean, this is a respected area right here. So we can see as the market came to this area, it came back down again, it broke above, and you see it retested. You see that exact same thing it did here when it went up and retested. It did it here too, but it went up a little bit. Just wait for the market to retest before you enter. Always wait for the market to retest in a key level. Then, my friend, you're good to enter a trade. That is all you need. Then when you wait for the market to... Now, remember, we're doing this on a monthly time frame. It's an analysis on a monthly time frame. You break above, wait for the market to retest. As it retests, you take it to the upside. And you see it came back again to this area. That's to show you that the market respects the market respects key levels, and learn to mark out your key levels correctly. The market is good to go. So now this is where we are. We can see how the market is moving. It came to this upside, it came back down here, came here again, it came here again, and it came back down, and it's going to the upside. And the good news I have for you all is that gold is in its all-time high. I mean, the height in which the price in which gold is now currently $2,600, as you guys will call it in the US, and we in Nigeria we call it $2,600. So gold is currently at $2,600. Bro, I mean, think about that. So it means gold is actually going to the upside. Now, would you enter this trade? That is the big question. If I were you, I was not going to jump. I still wish I was still on that my trade. I mean, by now, because listen, let's be honest. Like I said, I jumped into the trend here. So from here to here is about, bro, this is about 700 pips. From here when I jumped into the trade, so approximately 1,000 pips. And as you can see, imagine you were on a 1,000 pip trade and you were on a good lot size. You are so established for the rest of about 6 months. You're good to go. Why? Because you have followed the analysis of a good trader, which is you yourself. Yes, my friend, you are a good trader. At the end of the day, the big question now is, should you jump into this trade here? It's not going to be the best, because who knows, if you jump into the trade here and the trade comes back down, I mean, if you go for a buy and the trade comes back down, that's a massive loss, my dear. You're going to literally blow your account. And like I said, gold is in its all-time high. So if you go back, gold has never gotten to this level. It has never gotten to this level. And I said it before, and I'm going to say it again. I don't see gold doing something like this. Let's say it comes back or it breaks below here, comes here to retest and goes to the downside. No, I don't see gold doing something like this. Honestly, it's almost impossible for something like this to happen. Now, it could be possible. Look, you do not control the forex market, you follow the forex market. Listen to that. So it could be possible, it could possibly happen, but as my experience of being a forex trader, I don't see it happening. The worst thing that could happen is gold will come back to this area. That's the worst thing that will happen. And let's say it goes back up again. That is the worst thing. Sorry. That's the worst thing that's going to happen. So, Asemko in the Igbo land, you're going to wait for it to come back here before you can now, enter for a buy to the upside. And I mean, this is going to be a wonderful buy, because all you need to do is just place your stop loss underneath, and then you now place your take profit in its all-time high. So the market now does something like this. Let's say, imagine if the market does something like this. Currently, where the price is, it comes down to this level, and when it comes down to this level, then you enter for a buy, and it now goes up back to that same level. And my friend, you are good to go. Now there's a minor key level here. It's just a minor key level. We can see the trend lines here respect this place. So this is more like a minor key level. So maybe even if the market doesn't come to the downside, maybe it could come to this level and then go back to the upside. So the only advice, or the only suggestion, not an advice, the only suggestion I'm going to give to you is wait until gold comes back to the downside, then before we can take the trade. But maybe on my, yes, I know I uploaded it on my other channel where I don't really have much subscribers, so please subscribe to Mr. Sam 3.0. Now, I uploaded it on the other channel. Maybe if you had listened then when I said, hey, buy gold, and gold went to the upside, you would have seen that, yes, gold actually has potentials of going to the upside. But now it's not really a good time to buy, because you don't know what it's going to do. Like I said, it's at its all-time high, so we don't know what it is going to do. So let's just keep on watching gold. If we go back to Bitcoin, that was the exact same thing that happened in Bitcoin, because people who bought Bitcoin at this level, it literally turned back down. But when the markets now got back to this zone, you see, when the market got back to this zone, in which is a zone that you respect, then it now went again back to the upside, and so on and so forth. It came here again, it acted like it wanted to go to the upside, it broke below, and now it came here again, and now it came here again going to the upside. So a quick let's just do a quick analysis on BTC. BTC kind of has potentials to go to the upside because of this. Because of this. Now, this point is a point of no return. No one should get into a trade here. Because look, see this thing, if you go for a buy, this thing can just go down and blow your account instantly. So no one should get into a trade here. So maybe what you want to do is you're going to wait some kind of, you have to wait for some kind of entry signal, maybe for something like this, and it comes to the downside, then you can now take it to the upside. And you know, one problem with when a trade is at its all-time highs, there is no next level you're targeting, because it has never gotten to that level before. So the next level is something that you don't know. You don't know where the next level is going to be. So my dear, at this point in time, Bitcoin is really volatile, but here we don't know. It's not looking so volatile. Look, I'm saying this thing right now. One thing you should watch out for is I'm recording this video in October. Maybe sometime during November, when the elections of America kickstart, Bitcoin will have some volatile movements. XAUUSD, which is gold, will have a volatile movement also. GBP USD and Euro USD will have massive volatile movements, especially XAUUSD and BTC USD. So with the predictions I've given you, you need to watch out within the next 1 month and see how this market plays out. Remember, you should be a wise trader. And thank you guys for watching. I'm going to catch you all later in a separate video. Bye for now.